Bitcoin bulls finally managed to break the 9.3K. Is this the breakthrough we are waiting for, or is this a trap? Hello again and welcome back to my channel. It is 7:30 p.m. and we are UTC +8, and welcome everybody who is watching around the world. Let me turn off this sound first before everybody is pinging all the time whenever they send me a message or something like that. Anyways, want to wish you all the best on this what are we? Tuesday night, and yeah, let's say hello first to all the hardcore crew members who are here most pretty much every night. Hi Jeremy, hi Darren, hi Jerson, hi Sunday. Oh, it's not Sunday. Oh, it's a long time no see, Sunday. Hi Clancy, hi Zaldi, hi Gita, hi Fardeen, hi Lex, hi everybody. Welcome once again for this episode. So yeah, has been quite interesting yesterday. But before we go into the technical analysis, let's take a look at the COVID numbers while everybody is coming in slowly. Or hi Osakuni, that's an original name as well. So we are close to 3 million people now for the United States. Brazil is over 1.6 million. India over 700,000, and Russia, well, India has overtaken now Russia as the top 3 right now. So that is not very good for India. Let's take a look on how it looks on the charts itself. Let's refresh this one. Hi Alvin. Dun, 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 dun. And yep, we are over 11.1 million cases right now confirmed around the world. The chart does look like it's slowing down a little bit. It has been like that for a couple of days now, that it has been slowing down. But the top 6 countries does not show any signs of slowing down. As you can see, USA, Brazil, India, Russia, Peru, and Chile. All of the top countries are not showing any slowing down. So most likely all the slowing down of the numbers is most likely from the other countries. The European countries are doing a lot better. Asian countries, well, some Asian countries are doing a lot better. Actually, the Philippines is where I'm currently at, is not doing that great, and I'm kind of feel a little bit scared sometimes whenever I go outside. But yeah, everybody knows I'm a scared little chicken. So, but other than that, I really hope that things will become very, very normal soon, because, well, it's not fun having a newborn and be coped up inside all the time, right? Hi Phil. Rocket ship. Do we have a rocket ship? Anyways, let's go into our technical analysis. So, and let's move on update on what happened yesterday. So this is the daily chart. So what happened yesterday was actually very, very interesting, right? So we were looking for a breakthrough of the 9.3. Well, let's go onto the short time frames, because I think it's quite important what we are looking at right now, right? So we were looking at this triangle, and as you can see, we had a major, very strong move yesterday, where it broke out of the first green box here, and then it arrived to the simple 200 moving average, or this gray line here, and then it got rejected back down. And right now we are actually at a sort of like a crucial point, right? Like, do we bounce off from the triangle that we broke out from, or do we break down back into this triangle? And I think that will give us a lot more information than we are expecting. Well, let me give you my personal, of course, it's my personal opinion, because, well, I'm not a financial advisor. This is not financial advice. This is my personal opinion, right? I am still not convinced that we have a breakthrough of our pattern. And let me give you an explanation why. Because, well, of course, I'm a technical analyst, so I need to be clear that I am not trading my opinion. I have to be trading my technical analysis, right? So usually what we are looking at is, whenever we are in a accumulation phase, and as you can see here, this is basically the range that we have been into for since what was it, 25 of June. So 2 weeks, right? So this whole structure here, this is 2 weeks, right? 2 weeks. And hi Gil, this is 2 weeks. And like I've said before, if we are just purely looking at the volume candles, we can clearly see that all the red candles are the major candles in that structure of that in that 2 week structure, right? So that's what I've told you guys also yesterday, right? So when we see that kind of structure, usually it looks more towards distribution rather than accumulation, right? But so if we have been accumulating, let's just say it is accumulation. If we have been accumulating for 2 weeks, then like I've drawn it before yesterday. Let's draw it one more time so that people can see it. So if we are making a measured move from this triangle that is breaking out, then we can see that the measured move here is towards like 9.6k ish area, right? 9.6k area, and as you can see, that is very, very far away from where we are currently at. And I'm just thinking, well, if we have been accumulating for 2 weeks, why is the push that we are getting out of this triangle very, very small? This is very small immediately, as you can see, immediately, because currently we are basically almost back into our triangle right now here. Why is this push very, 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 very small? So those are the things, those are the reasons why I still am very, 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 very much very aware of the whole structure here. So what did I do? What did I do this morning? Well, I got stopped out during the night, of course, because we broke the 9.3k, but I actually entered back into my shorts a little bit higher. I'm around 9,340 or something like that. Basically, I was just looking at the simple 200 moving average, and of course I was looking at the RSI, and as you can see here, the RSI was very, very toppy outside of the bullish zone. So I was thinking, well, we should be due for a pullback anyways, right? So I entered a short position back in it again. Am I 100% fully convinced that the short is going to be working out? Well, of course it's not. But the thing is, and I think that's the most important lesson of being a trader, right? So I've been in a position from 9.3k for like the past 2 weeks or something like that. Didn't touch it. And when I was wrong, because we did break up above 9.3k, right, towards the upside, I kind of expected it to go to 9.6k, to be honest, like over, or at least retest this the second green box at the 9.5k, but it didn't happen. Anyways, the most important lesson is actually, even if when I was wrong, right, in terms of like, you know, but it's all about probabilities, right? So even if I was wrong, I did not lose any money, right? I think that's the most important area here. But does it look way more bullish than before? Of course, because we are now grinding more towards the upside of the resistance than the downside. But for me, I am very, very skeptical of this push towards the upside, and I still am in my and I think a lot of people will hate me for this, because yeah, I guess everybody is gonna tell me like, oh, he's bearish, he's still bearish, he still is not a true believer. Well, I will become a true believer when we do break out of this basically above this 9,450, out of this falling channel. That's basically that's basically what my when my bias is going to be changing. So in terms of a trader, I still feel that the ranges and the risk is very well defined, and that's the reason why I am still in my short re-entered my short, still convinced, still a true believer that this is not a downward trend, still a lower low that is going to be breaking towards the downside. But of course, that is, that is one way to be looking at it. There's also a second way to be looking at it, and I've been looking at the heat map. Let me go to the heat map. Yeah, this is the current heat map right now. And if you are looking at the heat map, you can see here on the top, in the top end, very strong resistance here at 9.4, extremely strong resistance here at 9.5 or 9,450 actually, as you can see. So the chances that it's of course it's possible, right? But it still has a lot of ways to go before it can break towards the upside. Other than that, towards the downside, we can clearly see we have just here on the 8.8K, and then we have to be going down lower. It is immediately at 8.5K, as you can see. 8.5K is where the next real strong support is. Okay. Other than that, we can also look very, very carefully at, and I think that is also very important here, at the VPVR, right? So right now we are in this zone here at this VPVR at the 9,250 area, or something like that. So of course, if we break towards the upside, oopsie, I misclicked something. Okay, back. So if we are looking at the VR area, 9,250 is obviously the key zone here of where the action is right now. Okay, let's move a little bit closer. Okay, but what do we need to hold? We need to be holding here the 9.2K area. If we break the 9.2K area, as you can see, this is a long candle here. If we break the 9.2K area, there is a very big gap all the way down until this area here at around 9,070, as you can see here, 9,070. So basically we can actually use that as a pivot point as well, right? So if we see 4-hour candle closes below 9.2K, then of course we can expect a dump actually all the way down towards around the lower 9.1K, so around 9,070, 9,080, something like that. And basically that's what we are looking at. The current candle, is looking quite okay, but there's still 15 minutes in the 4-hour, so I'm just waiting for that one. But it can be retesting towards the upside. I mean, it doesn't necessarily mean that much, anyways. But I'm just trying to give out a structure of a range, right? So let's take a look on the Fibonacci retracement. If we do a Fibonacci retracement from this bottom here, the 8.9 that we had, and the top here, we can clearly see here, this is the golden pocket ratio at 9,088 to 9,072, and that actually matches perfectly this VPVR on the bottom side here, right? So that's the reason why that area is very, very strong. People are putting bids in there at that area because they are expecting this to be dropping down towards this bottom of this support line once again, right? And then why is the 9.2K also a very important level? And you can clearly see here, if we break below the 9.2K, then we are going to be breaking below the 0.32 FIB level as well as a support. So I think it's quite the ranges are quite clear. So in terms of my own position right now, when will I be feeling okay? Well, if we see a candle close below 9.2K, then I'll be feeling okay, and I'll most likely be closing around 9.1K and just take that profit and then call it a day. I'm not going to be holding it for a very long time, because now things have actually changed quite a bit on the lower time frames. On the higher time frames, of course, as long as we don't break out from this 9,500-ish area or close candles above this green box here, things are very, very pretty much still the same. But that's the reason why I am okay with taking that risk, right? So when will I be closing my position? Well, for me, there's no point in be taking a lot of risk again, right? So if this is our top here, 9,389, if we make a higher high, so I'll just put my stop loss at like 9,395 or something like that. And well, yes, of course, I'll be losing like $50 or $60 spread, but that's what risk management is about, right? You have to be taking risks to make money. That's just how it is. But I do believe that it's crucial to be seeing right now what is going to be happening with the price action, and if we do get that push towards the upside, yes or no, or we get that pullback. Okay, so other than that, we can clearly see that the RSI is definitely, very strong right now towards the curling towards the upside, right? So like I said, I'm not 100% sure that it is a good move, but I still, because I've been looking at this on every day now for the past 2 weeks, and something, as you can see, the volume and everything is not really matching what the reality is. But of course, the market will always do what the market wants to do, right? So me as a technical analyst, I can only try to deduce the information from the charts as well as I can. Anyways, other than that, we can clearly see also that the volume structure has not been broken just yet as well, right? So that big move or that big break that we've been waiting for like a really long time now, since since the 30th of April, has still not been resolved, as we can see, right? So we're still waiting, and yes, the structure is getting more and more mature. So it can, I mean, as long as we don't see that candle, we will not basically see the break of the real structure, right? So what am I waiting for? Well, like I said, two things: either a break out of this channel and above this green box, or now in this case, a retest and break towards this green box here on the short-term time frame. What I want to be showing here is the larger time frame on the 4-hour chart, and that is we can see like this, right? So if we zoom out a little bit, we can clearly see that this trend line here, if we move all the way down here, this trend line has still not been broken, as you can see, right? So this, even though it looks pretty nice, we still have not broken out of this whole structure or this whole pattern, and that's basically the reason why breaking above this green box here at 9,450, basically towards 9.5K, is that important, because we want to be seeing a break out of the structure. Other than that, this could potentially, it's not obviously not sure just yet as well, this could potentially actually be forming a bear flag as well. So if we are looking something like this, let's put it like this. So if that is a confirmed higher low, right? Sorry, a lower a higher high here, that's a confirmed higher high. But if it's a local top and we make a regression towards the downside, then this could potentially be a bear flag as well, right? And then we would be breaking down quite substantial as well, right? So several patterns that could potentially be forming. Of course, nothing is guaranteed just yet, but yeah, that's basically what I'm looking at right now. If we do break out of this potential bear flag, then most likely we'll be breaking up above this green box, and then we are back into our more bullish territory. And then we are talking about, yeah, most likely first stop, like I said, measured move is 9.6K. I don't think it will stop there. It will most likely go to 9.8, 9.9K, because there's we've been testing that resistance for a couple of times now already. So I do believe that most likely we'll be heading towards around this area or this zone here between 9.8 or 9.9K. Yeah, Chainlink is doing really well. But the thing is, if depends on how you're looking at it, right? in USD or in BTC pairing. But if Bitcoin is going to crash in Chainlink is going to crash as well in USD pairing. But I can take a quick look at Chainlink in a while after I'm done with my whole rant on Bitcoin first. Anyways, so yeah, that 9.5K is super important, of course. And then yeah, this could potentially actually become a bear flag, as you can see as well. So that is something that you have to be taking notice of. Other than that, well, on the traditional markets, right? Like I said, very important is that we take a look on the traditional markets. And what I've seen on the traditional market is the following: we are actually on the S&P, we are actually starting to form bearish divergence, right? So price made a higher high here, as you can see here, from the 2nd of July to the 6th of July. All right, let's take a look on the RSI. As you can see here, from the 2nd of July, made a lower high on the 6th of July. And if we are going to take a look on our cheat sheets, this is here. So if the price makes a higher high, but the RSI makes a lower high, we have bearish divergence on the S&P as well, right? So we have some bearish divergence forming on the S&P. So let's see if that bearish divergence is going to be a larger pullback than just this small dip that we are currently seeing, right? So like I said, it still is above the EMA 21. So the traditional markets are on an insane bull run. So we will have to see if we go down more from there. But just taking a quick look at the Stokes, as you can see, we are at that resistance, as you can see, resistance, and then resistance here, very small resistance, and it pulled back up immediately once again. So if this one pulls back up once again, yeah, I mean, it could very likely as well. But as you can see, the Stokes are currently curling towards the downside. We do have some bearish divergence, and also the sentiment, as you can see, it's still green, with the green background, but it's starting to squish over a little bit now. Maybe it will become a red dot like this, squishing towards the downside. But like I said, it's something that we have to be waiting. I would not be surprised that we get another run towards the upside if the traditional markets make another run in like when the stock markets is open, New York Stock Exchange opens in like an hour and a half. If that does happen, then most likely, Bitcoin is going to be pushed towards the upside as well, right? But for now, I am very curious and very concerned with how everything is going. But of course, like I said, if we do break and out of this this channel, I'll be pretty bullish. I mean, I'll be switching over and trying to find longing spots rather than trying to be a hero and going into short spots. But like I said, it's still kind of not making any sense to me in terms of like the volume that we are seeing right now on Bitcoin. Okay. Anyways, yesterday I think Nikolai was asking me about the Wyckoff theory, if this was distribution or if this is accumulation. And actually there is a scenario that this was accumulation as well, and I've actually made a chart for it as well. First, let me show you the theory, and this is basically the theory of you have to be looking at this one. Maybe I'll make it smaller, and then oopsie, that's the wrong one. I'll take it out and then make it smaller so I can put it next to the chart. So this is one of the Wyckoff models that is potentially correct as well. It is an accumulation model here, and let me put it up next to the one that I've created here. Maybe I'll put it down here, then you can see it. So yeah, so this is actually a possibility or valid as well. As you can see, we have our BCLX, Psi, our AR, our ST, our creek, and our resistance, and then we can have a jump across the creek. As you can see, this is a beautiful accumulation phase. So we can go down very, very slowly. And if we don't break this support, then it's not distribution, it will be accumulation. And then what will happen is, of course, we will have a creek, we will go retest that one, and maybe we go a little bit down one more time, and then we will jump across the creek. So this is for Nikolai. So if this happens, then basically we are having accumulation rather than distribution. So like I said, in terms of like the Wyckoff theory, there's the two possibilities that we still can see, and yeah, both of them can still become a reality. The only difference is, of course, in terms of trading, is of course the big difference is, of course, the jump towards the resistance. So like I've also explained to Nikolai yesterday, if this doesn't break down towards the support line, the 8.6k ish area, 8.5 8.6k, and we do break towards the upside back to 9.8k or something like that, we have accumulation. And this whole pattern was accumulation and not distribution. And basically I was wrong from the start to be thinking that it was distribution, right? But like I said, in terms of the volume, in terms of making the pattern of making highs, lower highs, and having lower lows, and the momentum going towards the downside, and having the bigger candles into, you know, red candles, it still for me looks like distribution rather than accumulation. But like I said, the market is going to do what the market wants to do. Also, since that we also now know about the Ichimoku theory, we can clearly see that the blue line or the Tenkan is still below the Kijun, below the yellow line here, and we are still in our cloud right here. So like I said, I don't really expect us to have a resolution, you know, right away, but yeah, once we basically break out of this this cloud towards the upside or break towards the downside, then we will basically know what is going to be happening as well, or we will finally have a resolution as well. Also, a negative thing is, of course, the cross here. As you can see, the cloud is twisting the Kumo cloud is twisting right here. But that's basically yes, Rip Van Winkle. We can actually look at the COT chart. I'll go to the COT chart. Let me take a look. Where is the COT chart? This is the COT chart. So the red line represents the retail traders. The blue line or CN line is the professional traders. So that's basically grayscale and retail investors. And the gray line or the white line here is the institutional investors, institutional traders, like, you know, Backed and CME and so on. So as we can see right now, the professional traders are actually buying right now. As you can see, it has been steadily going up. The retail has been steadily going down. So right now the price is actually very bullish, mainly because of the professional traders, as you can see right now. And I don't know why, but yeah, I kind of am, you know, I'm kind of in a disagreement right now still with the professional traders right now. I'm more in agreement with the institutional traders right now, that I think that there will be most likely a drop towards the downside rather than the upside. But yes, I mean, that's basically where we can see what the momentum is for retail, or for institutions, or for professional traders. Anyways, so we have our candle closed. Let's take a look how the candle closed. Oh, the 4 hours looked it looks pretty good. It closed above the EMA 200, and yeah, it looks like a bullish candle formation. But like, if you are knowledgeable of candle formations, so this is only validated if the next candle is breaking above the body of this bullish hammer candle. So we need to have continuation to make this pattern to be a valid pattern, because if we don't, then this pattern is going to be invalidated immediately. So the next candle has to be breaking above the body of this bullish candle, right? So be aware of that as well. Anyways, Let's take a look on the expected move charts to be seen. Maybe we can see something there. Expected move chart, first standard deviation towards the top side is 9,348, and first one towards the downside is 9,189. And as you can see, it's flat towards the side, flat sideways. So 50-50, guys. It's 50-50. It's 50-50. Anyways, on the 12-hour Stokes, we can see that we are at the moment of truth, right? This is the moment of truth. Either we break out and we break up and out of this resistance, or we curl back down, right? And that, if we get rejected there, it's going to be pretty bad, though. It's going to be pretty bad. So let's see here on the daily, if we can see, yeah, daily is still curling towards the upside as well. So that's positive for the bulls. Let's take a look on the 4-hour chart. 4-hour is curling down right now, but this is a very dangerous curling down. This curling down can go back here and then immediately break up. So the next 4 to 8 hour candle close, yeah, quite important on that area, but it's a very tricky situation right now. And as you can see, still above the EMA as well. So it's a quite bullish situation, right? So boom, boom, boom. Anyway, let's take a look of the Nasdaq. Yeah, some money from the stocks actually went into, as you can see, it went down a little bit. So some money from the stocks actually went into the cryptocurrency for the last couple of days. So that's positive as well for the bulls. But yeah, still we did not break the key pattern, and it still looks like a very slow anemic push towards the upside. I still have my doubts. I'll be, like I said, I would be very careful. For the people who are not in a position, like I said, I think 9.2k area is the area to be looking. If we are closing below 9.2k area, would definitely try to get a scalp in there and short it towards the 9.1k, like $100, $120 move towards the downside. If we do break above this let's say 9.5k, if we break above that there, I do expect to have continuation at least towards like 9.6k, and then you know, fill out our measured move that we have been talking about, and then see how it goes from there. But for now, very, like I said, I'm still very concerned that we don't have the right structure to be breaking out of this channel. Also, I also put the parallel channel on the RSI, as you can see, and as you can see, we are still in this channel. And yeah, what you want to be seeing is, of course, a little bit slow down here and then a break up out of this RSI as well. So yeah, it's a little bit more patient. Definitely looks way more bullish than it was looking a couple of days before, when we were making all these lower lows, right, and kept testing this area here, but we never broke below this EMA 100. So bulls have been defending that. So that's something that we cannot ignore as well, right? So anyways, I still think that we have more down ways to go, but I will be looking very stupid if it doesn't happen, right? But yeah, I mean, that's what being a risk, being a trader is all about. So we still have to wait for confirmation and resolution. And like I said, the most important thing is really your risk management. Like I said, in case that you are wrong, that you have a secondary or a backup plan, so that you don't, first of all, don't lose too much money, or that you can revert your position or pivot into a different position, right? Because like I said, I don't really care if the price is going towards the upside or the downside, as long as we have like a strong movement, then you know, I'll be making money, right? I mean, that's what I'm in for. I don't really care if I was right or wrong, or like, you know, it's all a game of probabilities anyways, right? So short term, well, like I said, if we do break above this simple 200 moving average, yeah, that'll be it. That'll be it for me. I won't be too bearish anymore. Does it break the full structure? not really immediately. The real full structure is only broken when we are breaking above 9.9k or the 10k area. But of course, the bullish case, the Wyckoff theory of distribution case, it becomes very weak right now, right? So still waiting for two things to happen. Break above the 200 simple moving average would most likely be, you know, towards this area here, and then let's see what will happen. Definitely way more bullish than before, but still, I'm still not convinced, guys. I'm still not convinced. So yeah, maybe I'm being a little bit too bearish. Maybe I'm being a little bit too bearish, but I think we will just have to be more patient and see how this one goes. But like I said, volume profile. Oh yeah, BTC dominance. Well, BTC dominance has been going down, right? So let's take a look on the BTC dominance charts. BTC dominance market cap. See, wow. Broke down below below our my triangle that I was forming the other day. So yeah, definitely very good for altcoins. But actually, because of this actually makes me less bullish. I mean, more bearish than anything as well for Bitcoin, because yeah, Bitcoin dominance has been going down. Usually what happens is when we are starting a bull run is actually the BTC dominance going up, because people are throwing away their altcoins and switching it over into Bitcoin. Now a lot of people are switching from Bitcoin into altcoin. So altcoins have been doing particularly well because, well, first of all, when Bitcoin goes sideways or ranging, people get bored because it has not been very exciting, right? Trading Bitcoin the past couple of days. But that's when people get bored and they enter altcoins, and it has been doing really well, right? Because Bitcoin dominance has been going down. Anyways, promised to take a quick look at Chainlink, so let's take a look at Chainlink. Let's take a look on let's take USD. No, let's take USD. Wow, all-time high, baby, all-time high. Woo! Wait, let me take another chart, because this one doesn't have any indicators, so that I can say something about indicators. Let me duplicate this one. Keep this on GBTC, and then just take this one then. And then let's put on this, and this, and there. Now we have a lot more indicators. Then let's take a look on Chainlink. Yeah, Link has been doing insanely well. Look at this. Wow. Yeah, it looks really bullish. Looks really bullish. Take a quick look. Oh wow, that weekly. Yeah, I think continuation. This looks like more continuation than anything else. Looks very good. Looks very strong. Making all-time high. Now this looks like accumulation. This looks like accumulation, and then you can see here, small wicks down, small wick down, small wick down, accumulation, and then basically now we are having the push towards the upside, and that's basically also what I wanted to see in Bitcoin if it was accumulation. And that's the reason why I felt very when yesterday, when it went to like 9.4k, I felt like, well, that was very little, right? So what do we see? Let me take a look. let me take a fib extension. Fib extension. Wow. Yeah. We are now at the 1.236 fib. If this is going to be a 1 to 1 1 to 1.68 fib, it's at 8.5 dollars. So if there's any targets that you want to be seeing, well, those are the numbers. First target would be 6.7 dollars if we keep on pumping like this, and then the secondary target would be at 8.5. So pretty bullish. pretty bullish. But other than that, this looks, yeah, this looks very constructive. It looks very good. But even during pushing up periods, you can clearly see, right? I want to be clear. As you can see here, every time we push up, there are always pushing towards the downside as well. As you can see here, we have a 21% drop here. We have a, from this point top to the down point, another 21% drop here. And then here we have another drop here. This is little 13%. So that's basically what I'm always trying to say. This chart looks bullish in a macro perspective, right? So in this case, I would just be waiting. For a pullback and then buy it up. Basically, that's basically what you should be doing during a bull market, right? Buy the dip, and that's valid in when it is a bull market. When it is a bear market, of course, you will die if you keep buying the dip, because you will run out of cash very, very quickly. And that's something that a lot of people don't understand as well, because when we were in a bear market from 2018, all the time went down. People were saying you should be buying the dip. You should be buying the dip on Bitcoin. It will go up again. Well, it went all the way down from 20,000 to $3,100 before it went up. So if you kept buying the dip, you would have gone broke, right? So yes, now just purely looking at this chart, yes, I would keep buying the dip for now. But once again, and I want to be very clear as well, if Bitcoin makes a big dump, like I said, Bitcoin will be leading the charge, right? So if Bitcoin makes a big dump, then Chainlink is going to be taking a little dump as well. I'm not saying it's going to be a very big dump, but that's the time that you might be thinking, okay, well, maybe I can enter some or accumulate more of Chainlink, right? So yeah. Anyways, it has been very, very slow for Bitcoin. We have to be a little bit more patient. I feel that we have to be a little bit more patient, but I still stick with my plan. Like I said, until the plan doesn't change until I get confirmation that we are breaking out of my structure. If we break out of the structure, then well, I'll be switching over into my long positions and be happy, because we'll be making money either way, right? But I would, like I said, this is my personal opinion, of course, right? I would be very, very, very aware or very careful what is going on here. This can be a beautiful bull trap. Like this is like, it has like the warning signs of a bull trap, and that's just purely going off, like I said, purely going off technicals that I'm seeing in terms of volume, pattern, and structure. But it's like what Nikolai said as well. BTC does what it wants to do. So yeah, let's see what will happen. In terms of altcoins, once again, altcoins are doing really well because the Bitcoin dominance is going down, meaning people are actually selling their Bitcoin for altcoins. So yeah, like I said, when Bitcoin is ranging or going sideways mainly for a really long period, they just people like us, like me, get bored, and then you have to be doing something, right? So if you hear me sitting on a position for like 10 days and not doing anything else on Bitcoin, that just means that it's good times for altcoins because nothing is happening, right? Nothing is happening. But I mean, for me personally, it has been amazing this month, purely because of traditional market, because like my Tesla stocks have been it has been the craziest. I mean, it's just insane. To be honest, the past couple of weeks trading traditional markets feels like trading 2017 Bitcoin. That's basically how traditional market has been moving. It has been really crazy. DeFi is making huge moves, but I would be very careful with DeFi as well. Yield farming and those kind of tactics, I'm not sure if it's going to be very long lasting. Maybe for the next 6 months, maybe, but I do more research about it. So that's all that I'm going to be saying, because it looks really pretty. It looks really good, but I don't think it's a strategy that is going to be very long lasting. I feel that it's going to be hype for like this period right now for a couple of months, maybe 6 months, and then maybe you will see a crash. And definitely, well, it all depends on, like I said, it all depends if we are in a bull market, yes or no. If we are running into a bull market in the next 1-2 months, I mean, DeFi and other everything is going to be going up, everything. So it will be very easy trading. Basically, wait for the dip and buy the dip, and everybody as a trader will be looking like a genius. So it's going to be like trading a traditional market right now, where you just basically buy the dip and then you make money. But those times don't last, and people who know that since 2017 are aware of that. Yes, Laxman. Of course, there is some manipulation done by the whales, but you still have to understand the market cap of Bitcoin is quite substantial. So the whales itself, they can make moves, and usually that's what happens during the weekends, right? During the weekends, the volume is very low, and then they can play around with a lot of things, and then you can clearly see, like, sometimes you get like these patterns, and then a $100 or $150, sometimes $200 move towards the upside or towards the downside. But yeah, it can be very overall, people exaggerate a little bit about the manipulation, about the whales, to be honest. So that's my opinion on it, and well, I kind of know. Anyways, yeah, I think that's it for today. Like I said, I'm still skeptical. Yeah, sorry Moon Boys, I'm still skeptical. I could be completely wrong, but if I'm wrong, then I'll be losing some money, right? That's what it's all about. Adam, yeah, I mean, dollar cost averaging or buying the dip is a very similar strategy, but even DCA is not a valid strategy in a bear market. Once again, DCA or buy the dip or any strategy like that works only for bull markets, and that's a big problem that a lot of people don't understand that one as well. It might be, oh yeah, who are the bears? Well, they just want to make money, Bombwheat. So it has nothing to do with holding or anything like that. When the price goes down and they are shorting, they are making money, right? So it's all about making money. So that's traders basically. So they don't care if the price goes up or the price goes down. As long as the price moves, then they'll be making money. And the more that it moves towards the downside, if you are in short, the more money that you are making. So what you have is a bunch of bears who want to be selling the top and push the price all the way down and make money riding the wave towards the downside, and people who have bought on the bottom who want the price to be going up so they can sell and long and sell at the top. That's what market is all about. Yes, so that's the perfect explanation. You should not keep emotions into the projects, and just definitely in crypto, and definitely with coins that have such a very low market cap, it's very, very, very dangerous, and it can go to zero very, very quickly. Well, not go to zero, it can become a dead heartbeat chart, and then you still have people holding it, and I mean, even BitConnect, the mega scam BitConnect, it's still trading until now, right? So like I said, that's what if you want to become a solid trader, you should not keep your emotions out of it, and not think about opinion, right? Your own personal opinion. That's basically what I'm trying to do as well. I'm just basing this. It has like I said, I've given my arguments about why I think that this is a perfect setup for a bull trap, but deep down in my heart, in my personal opinion, I'm like, wow, this is gonna break up. We're gonna go to 11.5k, and we're gonna have amazing times. That's basically what my heart or my personal opinion is saying. But yeah, what the chart is telling me, what I'm seeing in terms of like the volume, what I'm seeing in terms of movement of the price action, it's just something like. It just basically gives me a spider sense, and a tingly spider sense, where I am, I'm very, very careful right now. But like I said, it's way more important to be knowing what your plan is rather than being right or being wrong, right? So like I said, if I'm going to be wrong once again, and this turns out to be a major bull movement, yeah, I'll be losing my $50 or $60 spread or something like that. So that'll be it, right? But that's the most important part, where you have risk management very, very defined, and where you have your ranges very, very much defined. But like I said, I have a feeling that this is going to be breaking down back towards the lower, 9.1k, 9,080, this zone here. To be honest, this zone here, I have a feeling everything that everything how it's looking and building up, and with the RSI being at that very high peak, plus the Stokes at that very high peak, and not breaking out of that triangle that we have formed on a very strong movement, I think we're gonna go back down there. And then the question will be, how will people be feeling once again if we are retesting this lower 9k area once again? That'll be the big psychological question. And then, well, the answer will most likely be depending upon the traditional markets. Once again, if we get a bigger pullback of the traditional market, then most likely Bitcoin is going to be pulling back down more. If the traditional markets keep pumping, and right now, to be honest, that monthly close on the S&P, on the Nasdaq chart, it's very, very bullish. So once again, that's basically what it's looking like, right? And yeah, that's correct, Jay Constant. But there's one thing that we have been seeing, right? So the stock market has been pumping really, really hard, while Bitcoin is actually more and more ranging, and that shows actually a weakness inside of the asset, and that's not a good sign for Bitcoin, to be honest. That's not a good sign for Bitcoin. Bitcoin should have gone towards that 10.5k or that 11.5k before. That's what, and definitely with the stocks markets and everything going up right now, but it hasn't done that just yet. So once again, it shows that we are still in a very young cryptocurrency market and industry, and we still have some time to go before it becomes high adoption and this and that. But anyways, whew, we have been ranting a little bit for too long for now. So let's call it a day. Like I said, still be very, very careful. What am I looking at? Do we re-break and close above the EMA, not the EMA, the 200 simple moving average on the 4-hour candle basis? Yes or no? That would once again push me towards telling that we are actually going back towards 9.6k and eventually most likely towards 9.8, 9.9k, and I'll be switching over my my bias towards longing positions rather than shorting position. But for now, like I said, volume, signature, and price movement and candles are still telling me to be very, very careful, and I expect a retracement actually towards the lower 9,000, 9,080, 9,070, somewhere around there, and then we will be analyzing stuff. So yeah, that's it for today, and hope to see you guys again tomorrow. Once again, same time, same place, 7:30 p.m. plus UTC plus 8, and then yeah, until tomorrow, of course, stay home, stay safe, and of course,